Welcome back. Well, there's a lot happening right there with the global economies that we track, and it's still all about tariffs. And it's coming in with more tariffs, or maybe less at this point.
No, it's not yet time to talk about less tariff.
Okay.
It's time to talk about more tariff.
More tariffs.
Even though background noise and talks is suggesting perhaps there might be a bit of compromise, but we're not sure yet.
I can imagine how markets will react to some kind of compromise with these tariffs.
No, markets are already reacting. For instance, European stocks today are expected to be higher because of the suggestion. We haven't heard of definite announcement that the 25% tariff on Canada and Mexico that kicked off yesterday, that there might be a compromise. We're not even sure yet. It's still like a rumor. But
maybe a pause for a month or so.
Maybe.
We'll check.
Good morning, everyone. Welcome to the Global News segment of Business Morning. We start from Europe, where German bonds slumped as investors brace for an historic increase in borrowing to fund defense and infrastructure investment. The yield on 10-year notes rose as much as 23 basis points to 2.73%. That's the biggest jump since June 2022. After Chancellor in waiting, Frederick Merz, said that he would set up a 500 billion euro, that's about $553 billion special fund as part of a sweeping fiscal overhaul. Euro rose 0.4% to 1.066, on course for its biggest three-day gain since late 2022, with investors betting the increased spending will boost European economy. On Tuesday, the Conservative Alliance and Social Democratic Party, that's the two groups that are expected to form the next coalition government following last month's election, agreed to try to reform the constitutional debt brake system in order to enable defense spending in excess of 1% of the GDP. Well, is widely billed as likely to become the next chancellor of Europe's largest economy, and said that they would also seek to create 500 billion euro credit finance special infrastructure fund over 10 years. Alternations or exemptions to the debt brake system have been seen as crucial as a way to allow fiscal loosening to boost Germany's struggling economy and increase military spending. The step remains politically contentious, and the euro extended its late Tuesday rally by another 0.47% against the US dollar. And we're still staying in Germany now. Adidas has reported an uptick in fourth quarter sales that exceeded expectations as the retailer shakes off weakness in North America and China demand. The German sportswear giant recorded a 19% increase in revenue at neutral currency rates to 5.97 billion euros in the three-month period, ahead of the 5.72 billion euros forecast that analysts have been giving. Operating profit came in at 57 million euros in the fourth quarter compared to a loss of 377 million euros in the same period of last year. Adidas is attempting to grow its market share in North America amid declining sales at Nike and a broader retailer shift away from an overdependence on a weaker China. Adidas North America sales, which fell 7% at currency-neutral rates in the third quarter, have struggled to recover from the termination of its once lucrative Yeezy sneaker line. The sportswear giant was forced to axe the Yeezy line after terminating its partnership with Ye, the rapper, formerly known as Kanye West, over a string of anti-Semitic remarks that the rapper made in 2022. The company said last year that it's expected to sell the remainder of its Yeezy inventory by the end of 2024. Chief Executive Bon Golden has been looking to distance Adidas from the loss that Yeezy made and to spark a wider turnaround of the brand since taking the helm in January 2023. Well, all of this meet in the European stocks market, where it's heading for a higher open on Wednesday amid optimism that the United States President Donald Trump's 25% duties on Canada and Mexico could be relaxed, with investors also paying attention to the potential reform of Germany's contentious debt brake system. The UK's FTSE 100 index is expected to open 56 points higher at 8,806. Germany's DAX supposed to be up 416 points to 22,733. France CAC 146 points higher. Italy's FTSE supposed to be 403 points higher, according to data that's being circulated. And the introduction of fresh U.S. tariff has rattled global market sentiment amid concerns that they will reignite inflation and escalate a global trade war. Well, one country at the middle of that global trade war is China, where they're set for a forceful economic growth goal at about 5% for 2025, raising expectations for officials to unleash more stimulus later this year as they confront the trade war with President Donald Trump. Premier Lin Guang announced the target on Wednesday morning as he delivered the government's annual work report to the National Parliament in Beijing. This marks the third straight year that has China set that goal, but repeating it again may be difficult. Meanwhile, China has unlocked more fiscal stimulus on Wednesday, promising greater efforts to support consumption and cushion the impact of escalating trade war with the United States on an economy that Beijing is determined to grow by another 5% or so this year. The premier, in a speech at the opening of the annual meeting of China's parliament, warned that changes unseen in a century are unfolding across the world at a faster pace. And we know, of course, it's connected to the trade war. And President Donald Trump has said that he received an important letter from Ukraine's leader, President Zelensky, looking to smooth out over the clash that erupted during a contentious Oval Office meeting, but held back from lifting a U.S. pause on military aid or announcing a revived minerals deal. Addressing a joint session of Congress on Tuesday night, Mr. Trump read out part of what he said was the letter from President Volodymyr Zelensky, and he echoed a social media post that he wrote earlier, voicing regret over how the Oval Office meeting with Trump played out and saying he was ready to sign the natural resources deal that was scrapped over the encounter. Meanwhile, Ukrainian President Volodymyr Zelensky has said that his Oval Office meeting last week with President Donald Trump did not go the way it was supposed to, and he described the February meeting as regrettable. Notes that Ukraine is ready to negotiate about an end to the conflict. Now, let's have Washington. Let's have our correspondent, Maria Bird, join us now to tell us perhaps some background story about all of this and find out what's going on around this. Maria, can you hear me? Good morning.
Good morning.
Yeah, so it was a heated conversation at the Oval Office last week, Friday, and now we're seeing regrets, apology in one way or the other. What's the sentiment around the U.S. concerning this?
I think the sentiments around the U.S., one was not surprised, but surprised because the U.S. has been a strong supporter of Ukraine. I think there was expectations that there could have been some challenge with the meeting, but I think where the U.S. has stood for several years as its support level to Ukraine, there was some surprise in kind of how everything panned out. Now, I think that the idea around coming together for a deal, I think that Americans would not be surprised about that. And I think that Americans are looking for ways to partner with Ukraine as they've done in years past. And that does not depend on party. I think both Democrats and Republicans were very interested in, one, as the president has mentioned, ensuring peace between Ukraine and Russia, and two, ensuring that Ukraine has what's needed, especially for those individuals who are negatively impacted by the war that are living in Ukraine.
All right,
very
Maria.
much a human rights issue.
Okay, Maria, just a minute now, just a minute. I'll get back to you. But to our DSTV viewers, right now we have to lead you to First Bank headquarters groundbreaking ceremony. It's happening at Eco Atlantic, obviously in Lagos. That's for our DSTV viewers. But for our other viewers, please do continue with us right here, Business Morning. And if you're watching on YouTube, you can just switch to the next stream and you continue here. So, Maria, you were saying?
Yeah, so I think that it's as you mentioned. I mean, coming forth around the natural resources, the deal that he's now wanting to entertain. I think that that's something that Americans will look to see how it all pans out. I think that this is no surprise, but definitely wanting to find ways to continue supporting Ukraine as much as possible.
Yeah, but you know, one of the sentiments that came out of that meeting also was it does seem like perhaps President Donald Trump is taking sides with President Putin because it looks like, you know, it was all Ukraine's fault. And even when President Zelensky tried to say, oh, we had tried to sign deals with Russia and it was not adhered to. So does that sentiment also run through in the U.S.?
Well, I think the U.S. and Americans who might have had, as we know, it's a very divided issue between Russia and Ukraine here in the United States. Previous administration was very supportive of military aid to Ukraine, but also wanting to ensure peace between the two countries. But we knew that Russia and the U.S. were going to have tighter relationships once President Trump was in office. They had relationships in his previous administration. I think that it was very clear that that would be a strategy moving forward. And so I don't think Americans are surprised. I think Americans are very hopeful that there could be peace talks between the two countries, and that maybe if there is a possibility that President Trump can assist with that, I think that's really ultimately what Americans are looking for.
Yeah, and then this perception that perhaps President Trump could tamper justice with mercy when it comes to the tariff, especially the one that started yesterday for Mexico and Canada. There's the notion that perhaps he could hold it off or reduce it. How true is that?
Well, the stock market yesterday, as you know, took a bit of a hit as a result of what they believe the tariffs at 25% on both Mexico and Canada. But the evening, the stock futures were showing signs of growth after the Commerce Secretary stated that there could be a deal, there could be some coming in the middle between the two. But I think that that is not a today issue. I think that we might see that next week, maybe potentially to see if there's any coming to the middle ground on that. 25% tariff on Canada and Mexico, the two bordering countries. I think Americans are wondering how that's all going to play out because there is such a heavy trade relationship between the two. You think about just simple things produce here in the U.S., which come from Mexico, and to think of the cost of those just skyrocketing. And so I think that's really some of the very basic things that people use each and every day that are in the stores that people will either be paying extremely higher prices on, or maybe some retailers will decide not to purchase them at all.
But can we say that the impact of this, we've seen the investors and the markets reacting to the trade tariff. Can we say it has slipped down to the everyday pricing of, I mean, you just talked about avocado and all of that. Is it being felt yet?
It hasn't been felt yet with Mexico and with Canada, but you do see other things around that potentially are direct relationship. Now we've dealt with inflation. That's the other challenge. We've had issues with inflation even prior to tariffs, and so there's a mix of things happening at one time. We still have not been able to truly stabilize inflation, which was why we have not seen a lot of decrease in interest rates, and there's not an expectation for one anytime soon. And then you're also seeing, as you mentioned, the tariffs, and so I think there's multiple layers to potentially why we're seeing higher prices on some things.
All right, Maria, thank you so much. You'll certainly be on this story, and hopefully President Trump will be a little bit soft on those trade tariffs. But thank you so much for your time this morning. All right, so there you go, Ladi. Perhaps, you know, last week, Friday, was the heated conversation. Let's make our way to the Oval Office. Perhaps we can change the mind of President Trump.
Yeah.
You know, I mean, you heard Maria say things like avocado that come into the United States from Mexico. These are everyday products that people need to consume and all of that. And by the time, if this tariff persists, we can certainly expect. In fact, I know if it was Nigeria, just the announcement.
Yeah, the prices would be up already.
The prices going up.
So I guess that's the major risk, you know, experts have talked about, you know, when it comes to these tariff wars, it's inflation. Yes. You know, in the U.S., they've made, you know, good progress, you know, so far.
Yeah, it's kind of well sad because at the IMF meeting that we had in October at Washington, One of the things that IMF and World Bank were very proud about was that the world has made progress in dealing with inflation, and inflation had started the downward trend. So, I mean, with all of this, that can just be pushed aside because this is obviously inflation staring everyone in the face.
Right.
And we know the
And that's
consequences.
global inflation.
Yeah, that's
and
global
we have some
inflation.
countries that are still struggling, you know, with taming
We're
inflation.
still dealing with very
Exactly.
high inflation in Nigeria. So, and you know, we are very closely connected to United
imagine,
States dollar, especially.
You know, heavily import-dependent countries too. That's quite incredible. Anyway, thank you so much, Ini. Definitely the global space. So much happening. There's so much drama. And we'll keep covering all of that drama right here on Business Morning. Thank you for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.